Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the last day of January. It's the 31st. It is Thursday. The week is coming to an end. Bulls kind of stayed in control. Some things slowed down a little bit. NASDAQ really showing well today, no doubt about it. Certainly seeing some movement in quite a few of our sectors for sure today. So, of course, as we work through earnings season, yesterday was Facebook. That was the big talk of the town. Now we're done with that and moving on. And good afternoon, Patricia. Good afternoon, everybody. I hope you all had a great day in and out of the market, as it continues to be an entertaining earnings season. Facebook up big today. Of course, we're moving on. Now it's time for Amazon's earnings, right? They're the big name reporting here. Just a quick glance before I jumped into the recap here. It looks like they beat on earnings and revenue, and forecast disappointed. Now, all I got was headlines, so I don't know how, what exactly everything played out to be. But that looked like that was the first initial reaction, was down just a teeny bit in after-hours trading. But again, we're still early. There's going to be plenty of time to process that. So they're going to kind of be the talk tonight. But Aflac, Edward Life Sciences, certainly no small companies, as you can see here, coming out. And then tomorrow, before the market open, we've got our Chevron, we've got our Exxon, we've got our Merck, Honeywell, still a slew of big names coming our way. It's not over yet. There's still Friday. We still got lots of earnings. And good afternoon, Blake. Great to see you. Great to see you guys as always. So definitely an interesting day in the market. We definitely saw some moving and shaking in a few different areas. Big push on gold. We did sell off a little bit, but we were into 13.25, 26, 27. I'm not sure the exact number, but we were in the mid-high 27s. We did sell off a little bit towards the, throughout the day, but still looking really good over there, as we'll see. As you look at the 15-minute on the S&P 500 chart, kind of push up on the open, kind of drift throughout the rest of the day, kind of fighting with that nice round 2,700 number. As a little bit of resistance, whether it's hard resistance or psychological resistance, I guess it doesn't matter. So traders clearly are watching that, closing above it. Here today, taking out. I added these trend lines. Where it was applicable, maybe taking out that longer term trend line. If you look at the weekly chart, to see this, and crypto brought it up in relation to the into the Dow Jones yesterday. That was a good idea to add them here for our discussions. Kind of taking out to that trend a little bit, at least sticking our nose above it here on the weekly candlesticks. Continues to show good solid. We're above everything. We still have earnings. We still know that they can impact things. Just ask the material sector how a big name can impact an earnings, your ETF without. We'll see, but still plenty of room. We've got that flat 200 kind of above us, and I think probably thinking in stages is the way to go about this. Really not a lot of resistance until we work into that. That again, a flat average for me at least, not a big deal, but I'll always show it a little bit of respect because I've just been trained to show the 200-day moving average respect. And then really not a lot into that 28. So realistically, we still have space. We've talked about that before in the S&P 500. Very clean break to the upside over in the NASDAQ. Facebook, big part of that, no doubt about that. But whatever the reasons, and hello, Abel, great to see you, my friend. Whatever the reasons, clearly taking out that little of the week, clearly taking out that downward trend line, kind of that last leg standing, showing more upward movement. Again, from a trader's perspective, I really think we can be looking at these lows as kind of that new swing low. And realistically, as long as we're maintaining this pattern, I think you really have to be cautious on the bearish side, broadly speaking. Obviously, there's always interesting bearish candidates out there, and we should always be open to them. But broadly speaking, we've seen a lot of good stuff. Those buy signals continue, still not generating sell signals. At least I don't think so. Not really a lot until we work into, 7,000 is probably something worth keeping our eyes on just because of how big of a number it is. There's not a lot of history there, especially, as we kind of look at this chart. But we know traders, they like to say round numbers. It's easy, it's convenient. That's kind of the next level that I'll be kind of looking at least for short-term resistance. The Dow Jones really had a hard time getting going today. Now, Dow DuPont really drug, everything that was around down today. They really missed on their earnings report, or at least the reaction was certainly very, very terrible. Maybe it was an overreaction. Crypto brought this up, and I do think this is probably a better chart to put up. Something to kind of keep in mind. We're seeing a ton of buy signals. We're not generating any sell signals really anywhere, in my opinion. But we still have not come out of that trend, specifically in the Dow Jones. That might be something that we can keep an eye on as we move forward. Not to say that I'm freaking out about it by any means, but that might be one of those areas to keep our eyeballs, as we kind of look to fill this space. Closing above the 200, really just a there day. Not a lot to say about the Dow, really lagging behind the other indexes today, though. RUT, nearly 1%, S&P nearly 1%, NASDAQ nearly 1.5%, and then there's the Dow, flat as can be, but didn't do anything wrong, right? Just didn't do anything. So I guess is the best way to put it. Over in the Russell, I think we're generating more tradable signals over here. We've taken out that top. I think we, arguably, and we talked about this yesterday, took it out yesterday. I wanted to see a little more movement to the upside, especially early in the trading day, to call it a little bit of a break. But I think we can say that we have that knocking on the door of 1,500. If we can knock that door down, I will expect us to fill up the rest of this space. I will personally be looking at 1,550 as kind of the fairly easy, quote unquote, path to travel, because there's just nothing to hold us down. From a technical point of view, all of the indexes really maintaining where we were, yesterday, carrying that momentum for the most part. Some prettier than others, no doubt about it, but nothing really has changed other than a little building, a nice break on the NASDAQ, though, no doubt about that. I finally have something new to say about the communication services sector. But before we get there, let's talk material. Now, Dow DuPont, big component, number one component of this ETF, down big on earnings today on the open. Let's just pop them in here real quick. Really, really rough day, and really had a hard time, getting any steam. That's one nasty closing candle, right? Big gap. Hey, maybe this is a sweet deal. We see that, right? Nope, it's not. Everybody starts selling it. So a lot of weakness in Dow DuPont, a big component of this ETF. That, of course, impacted the open in particular on the materials ETF. Big gap to the downside, but showing a ton of resiliency. Whereas we saw what Dow DuPont looked like, right? You only get that candlestick by plenty of selling off of the highs. We really fought back here, which I thought was a fairly impressive because of that big earnings miss in this sector, kind of using that old, general ballpark vicinity trend line as some support. And so I really was impressed with the resolve of this sector. Would have been easy to, call it a day and not do anything, but really we saw folks buying off of it. It's been showing a lot of strength. Again, I will continue to monitor this 52, approximately low here as our support level. And as it currently stands, I won't be bearish, broadly speaking. Now, I won't be bullish on Dow DuPont with the way it looks anytime soon from the looks of, broadly speaking, still I'm personally okay being bullish on this as long as we have 52 support zone. A lot of, would have been easy for this day to kind of just be in the red, right? It started out there, big gap down, and I at least thought there was some nice resolve there. Over in energy, pushing into our high from last week, ahead of quite a few earnings. Again, we know the numbers. We know that 65 is out of history. We know we're hanging out at that short term. We know we're putting in higher highs. and higher lows. We've turned on our moving averages. So we know where we are here. Earnings going into late this week, early next week will probably give us the push one way or the other. And personally speaking, I've talked a lot about how that 65 scares me, and it does, and it will continue to do so. So it's no longer there. Above 65 is going to be a pretty solid signal from a bullish point of view at the same time. And so, I'm not going to be the trader that's here before it happens. Realistically, certainly not at the price that we're at right now, but a break above 65 is going to be, in my opinion, a pretty solid bullish signal. We've got some seasonality in the energy sector, going into February, March as well. So break above 65 could be interesting. I remember watching it all through here. Seasonality, it does tend to, have a nice run in February into March and April. It didn't happen last year until April. We hung out at that 65 and 68, 68.50 just for, a month and a half, 2 months before a nice clean break. So just because seasonality is there doesn't mean anything, right? It just means it's something to keep an eye on. But certainly something I'll be watching. But again, it's got to get there. It's got to get through there for me to want to get on board. Lots of earnings can have an impact on that in the very, very near future. So that should be fun. Financials, really interesting day. Banks really struggled. Your banks really did not have a great showing. Other areas, industries within the financial sector, such as insurance and whatnot, actually showed pretty well today. We had Aflac coming out after the markets closed for its earnings. I didn't get to see it, but that's one I'm really excited about. I was a lot more excited about it yesterday, but I'm really excited to see what happens because they've got that 48 kind of an all-time high level of resistance. As you guys know, I like things that might be gapping into resistance if they have a good report for potential breakouts. They really ran. People got excited. I don't know what it was, but they got excited today. Looks like a headline misses on revenue, but beat earnings. So that'll be interesting. But back to the overall sector, just continuing to hang around. Again, this could have been one of those areas with the big banks, really showing in the red today. Could have been easy to sell, but it was propped up by some other industries. Obviously, at this point in time, I think we have to be thinking a break above 26 is a big deal for the sector. Now we're well over a week bumping our head, consolidating just below that price point. I think that will end up being a nice signal if and when we can break through that. But we haven't done it yet. We continue to bonk our head in that approximately 26 range. We've not been able to close it. We closed right at it. We broke it on the intraday. I would love to see that break as somebody who overall likes this sector from a bullish point of view right now. Industrials doing exactly what they're supposed to do, making it real easy on us traders, breaking out yesterday, carrying through, no excitement, just carrying on that momentum, working to fill up that space. This is exactly what you want to see on your breakout, right? Just keep on pushing up. And so very well behaved here today. As we talked before, really not a lot until we work into these highs. I'm calling the 200-day moving average because that's going to line us up pretty closely with them. And I will, look at that as a potential challenge if and when we get there. But again, as we've talked before, it could start going down anytime, right? This could be the end of the trend starting tomorrow, but from a technical point of view, I'm not seeing it. I'm not seeing why it would do that. That just anything could happen, but I don't see a technical reason why that would happen. So I continue to be, pretty happy with the way that this sector is maintaining and behaving. Very well behaved. Over in technology, I just kind of was there, today, pushing a little bit, but not able to carry on that momentum, which is kind of funny because of that nice move that we saw over in NASDAQ. We kind of think NASDAQ and tech, but, Facebook's in communication services, right? That nice move got, gobbled up by another ETF. So, but holding steady, much like we've talked before, much like the industrials, just a lot of room for us to operate with between here and our next level of resistance. Certainly a strong NASDAQ is not a bad thing for the technology sector. And I think that's probably, that and the Russell to me are probably the best looking charts, index charts right now. But carrying on, that momentum. Gotta like what you see there. Again, still not generating sell signals if that's what we're looking for, and that's okay if that's what we are, but I'm not seeing them being generated just yet. Over in staples, I guess I should have trusted the bullish pullback. I didn't, and I'm okay with that. Although I'm not a crazy person, in hindsight, I wish I would have. So as we saw, really nice movement in staples and utilities today. Utility chart's going to be a fun one to look at, showing a lot of strength here today. No two ways about it. Again, for me, this is what I'll be watching. I'm not interested as a buyer. I'm not a bear. No questions asked at that level by any means, but that is a resistance level that I will respect until it's not there. But realistically, no reason that we don't have more room to challenge it. Whether that's a big deal or not, only time will tell. But really not a lot between here and that 54 approximately, where that's going to line us up with that trend line if that's something that you're watching. If that trend line doesn't concern you like it concerns me, and I just have seen it too many times, and I know that I don't have to chase things I'm not comfortable with. If that doesn't concern you, you have to really like where this is at. Really a lot of room to the upside. Really until 55 is probably your next level of resistance if you are not worried or looking at that old upward trend line turning into a resistance zone. Again, I worry about those things, right or wrong. I do, and I will again. But strong day, no two ways about it. Nice clean break, nice run to the upside here today. Utilities, same song, same dance, except we're going to get to put that trend line to the tests immediately. So really got going today and just really kept going. So an interesting day in the market where we saw, multiple areas and different types of areas, defensive areas showing well, but aggressive areas like communication services showing well. But over in utilities, we are there. We have ran into that break back above 55. I will consider that as another bullish signal. Broadly speaking, in the utility sector, that would get above. I'd want to see a close. I would need to see a close personally. I'm going to treat this as a resistance zone, something to be worried about. And again, right or wrong, I always do that. And so, again, I'm not going bearish here, certainly with the way that it looks. But I will watch that as a resistance zone. If we can push through that, again, 57, there's really not much. If we can take this out, there's not a lot of resistance until 57. So there's upside in the utility sector if that can be taken out. Again, for me, that's got to be taken out before I'm comfortable with that. And we're going to put it to the test one way or another, right? I'll get to find out. So huge movement. Utilities up well over 2% here on the day. Healthcare, lots of earnings behind us, lots of earnings, handful of earnings still ahead of us. Merck tomorrow, for example, big name there, but cleanly breaking above 90 here today. As all things have been decent on the earnings front over in this sector, in my mind at least. There's been some misses. Of course, there's always some hits and misses, but cleanly breaking above that resistance level at that $90 mark. Not a lot of resistance, really. Again, in my mind, room to run until we work into 93 or approximately thereabouts. Very open space within the sector. Few more earnings that definitely can impact it. There's no doubt about that. But once that's behind us, I love the wide open spaces. And there used to be a Dixie Chick song called Wide Open Spaces. I won't punish you by trying to sing it, but it just popped into my head. So strong move over there. Nice clean break to the upside on the ETF. Certainly another signal that the bears aren't ready to be in here. Just continue. I love the way discretionary has played out. It has been so anticlimactic. And hello, Chicago Realty. Great to have you with us. Welcome, welcome. You over in discretionary. I mean, it's just kind of dull, but just churning it out, right? Gets to one level, pushes through, gets to another level, pushes through. We're able to push through that 200, that 108, which of course is an old level of resistance, old level of support. So if one of these, price points from a historical perspective were going to be a big deal, I would have thought 108 was probably the most likely candidate. Now it's just one day, it's just one close, but a close is a close, right? Probably realistically 110, kind of that next level of resistance, at least in my mind. Really not a lot if we can continue this to stop us on the way to 110, into 112, into about 114, 114.50, into 118. So it's going to keep having those stages. As far as it wants to run, there's going to be stage after stage after stage. But I gotta love the way it has been performing as a whole this last little while. Gotta like the way real estate. I mean, this thing has been on fire, to put it mildly. I mean, it has taken out these levels of resistance. 33.50. A lot of history there. It closes there at the end of one day, breaks at the next. 34. A lot of history there. Closes there, breaks out the next. It has not cared about these historic price points, which is very impressive. We are now closing in. At the next real level of resistance is going to be in this 35 range, where we've had this old high. This was our high point in the history of this ETF at $35. These stocks continue to show well. Many of them have broken through resistance and all-time highs. Definitely not seeing any sell signals still over in real estate. We're breaking resistance like it doesn't matter. I would personally still like to see a pullback for new real estate opportunities. Personally, this is just very extended. And while I'm never going to bet against something because it's very extended, it's okay to want to pull back, for new entries, right? But this high, that we're going to be knocking on the door of very soon at 34.50. Beyond that, really nothing to 35. Beyond 35, there's no history at all. So, when they say V-shaped recovery, I mean, this is it. The market's been pretty V-shaped in its recovery, but this is a V-shaped recovery in the real estate sector. Ton of strength over there. Very impressive. Keep an eye on 34.50, though. Again, it's been taking out resistance, and that's awesome to see, but you always want to respect resistance. And lastly, finally, for the first time ever, I can say, yeah, I'm on board, to be looking at the communication services from a bullish point of view. Now, that can change as of next week if Google misses its earnings, because as we've talked before, Facebook and Google are very heavily represented in this ETF. And so, I mean, this was largely driven by Facebook's earnings. And make no mistake, there was a very solid report, in my opinion at least, and a very solid response to those Facebook earnings on Facebook. It definitely moved its way into the communication services. But do keep in mind that Facebook and Google are very, very heavily represented in this ETF. So the only thing that can throw cold water, because this is a pretty nice signal, in my opinion. I've been waiting for it for a long time. You guys have probably got tired of me talking about it's got to break this trend before I trust it. But that's a strong signal. Looking at this on a weekly chart, I mean, that is taking out trend, breaking resistance. That is a pretty bullish signal, in my personal opinion. Again, Google's earnings are definitely going to have an impact here, one way or the other. Maybe not to the extent that Facebook's did, maybe more. So I don't know, but really have to we've cleanly taken out that trend. So that was always my concern, and you guys know this. It needed to. I didn't want to have to debate it. I can now say it took out that trend. The first time ever I've been able to say that. And so I will certainly be changing my tune as long as we're able to hold that in the days to come. So a very interesting day. Strong moves in over in staples, strong moves over in the utilities, certainly really respectable moves going on over in discretionary, over in healthcare, little lackluster in the technology sector, kind of just hanging around in the financial sector. Good response, in my opinion, at least in the material sector. So very interesting day from a sector perspective in the market. Not a lot changed from a charting perspective, except that challenge the utilities. Again, that's it's not going to, whatever happens, it's not going to matter to me because it's not going to impact me one way or another. But I am very interested in seeing this. How do we play off of this old trend line? It's even lining up with an old resistance level at 55. It'd be really interesting. If we can power through that, that's going to be, in my mind, a fairly bullish signal in that sector. So fun day from a sector perspective, no doubt. Over in the VIX, again, bulls are feeling good, right? No surprise, the VIX is maintaining, on the lower side of its range. Gold really movement going into today. Let's go into an hourly chart just to kind of see this. We did say nothing dramatic. Looks a lot like a bullish retracement on the hourly chart, but really some solid movement into the, I think it was 1327 or 25. 13, 20, maybe it's 23. Good solid movement, however you want to call it, here today. As you can see, spent much of today, the day pulling back off of those highs. Nothing from a sell signal point of view, at least on an hourly chart. Bulls overall certainly remain in control of this. At this point in time, looking at this candle on a daily, a nice little doji. We broke 13. We're at topped out at around 1325, about halfway, not quite, but about halfway through the potential trading range to our next level of resistance. So, mentally prepared for a potential pullback in gold. I'm not saying I know the future. I don't know that it's going to retrace, or I would happily tell everybody that. But a little bit of a doji, nice movement through that breakout. A pullback wouldn't be all that surprising, right? A little bit of a bullish retracement wouldn't be that shocking. So I'm from Utah, Chicago. I'm guessing you're from Chicago. So yeah, I'm a Utahn. So one of the snow hating Utahns, no doubt about it. I'm ready for winter to end. Over in silver, really similar situation, knocking through that 16 early, closing right above that here today. Very similar activity for the most part on that intraday. A little more, I don't know, violent. That might be a stretch. When the selling started, it did pick up a little faster, I think, than our gold did. But really the same type of pattern developing, pulling back. I think, again, I've said this before, I'll say it again. I think we want to, for any new trades, we want to be comfortable to say that we're above this old floor. And, it would look like we were going to break through that today. Doesn't look to me like we were able to close above it. Now, if I'm in a bullish play, that's just an area that kind of mentally preparing for maybe some profit taking. Certainly not a bearish position for me. But if I'm looking for a new play, I want to make sure I'm on the right side of it. Again, much like gold, there's plenty of room. I don't have to run into these things worried I'm going to miss out on the next big thing. There's always another opportunity, right? So I don't think we were able to kind of cleanly break that, but, and probably at least somewhat psychologically important, we were able to close above 16, which of course is a really easy number to go with. 16, well, that's a really easy number to work with. So a little bit of selling off of the highs, kind of pulling back. Be interesting to see if we get a little bit of a pullback in our metals, or if we just continue this very impressive momentum that we've seen develop over the last little bit. On our dollar, probably to not a huge surprise, at least trying to develop a little bit of support off of that 200. We did break it on the intraday very briefly, rallying back, clearly closing above it here today. I still maintain that this is not a great looking chart. There's so many better looking charts out there, in my opinion, that I'm not going to mess with this one. I guess you could make a case, to buy off of the 200. I would, I wouldn't fundamentally disagree with that case by any means. But at the same time, we're putting in those lower highs and lower lows. For me, got to get back above this 96.50 approximately resistance. Any potential pullback, certainly not aggressively, So I'm going to continue to maintain my on the fence stance on the dollar, still leaning a little to the bearish side, but I'm not going to be surprised if we do see a little upward movement off of the 200 period moving average, because I'm never surprised to see a bounce, even if it's just a short-term bounce off of a rising 200 moving average, wherever it is. So natty gas, oh man, natty gas. A little more drift to the downside here today, working toward the lows of the week. So we've got a little intraday action we can talk about here potentially. But of course, we only have one day left in the week, and then we have to reset it all over again, because one way or another, it's likely these guys are going to gap on the cash open next week. So if that breaks, there really isn't any support until we work back down into these lows at around 275. But it can break tomorrow, and I'll just say good luck whoever's trading it, because there's no way I'm holding a natural gas play over the weekend until it stops doing these crazy opens, it's not done it yet. One day it will. Hey, it's fine. It's gappy on its opens. that's fine. There's gappy and then there's gappy, right? And for me, at least, this is gappy, not for me, way too wimpy for that. Certainly, interesting to see if, from an intraday perspective, if we do take out that floor, if there's a little bit of short-term selling. But we'll have to see where we open next week. And again, natural gas has been real easy for me. This is the only time I spend with natural gas, is the time I spend with you guys. I don't think about it any other moment throughout any day. But one of these days, it's going to be lining up. It's going to look good. It's just not today, at least not in my opinion. And lastly, crude. Fun day over in crude. As we really knocked on the door of 55 yesterday and then briefly pushed through it here today on the intraday. Let's just come into an hourly chart here. We break 55 and hold it for 2 candlesticks. Yep, there's me drawing lines again. If it's your first time here, just get used to how terrible I am at drawing lines. I'm never going to get better. I don't know why, but I guess it is what it is. But we were able to break on the hourly 55, held it for a couple days, came back to test it, and then faltered. So, this is why a close is so important to me, at least. It's just too easy, and maybe easy's not the right word, but it happens way too often where we can break, on the intraday. We saw, on the 200, on the dollar. Break of that 200, that's a sell signal on the intraday, but it just isn't able to maintain it. So it's just so much easier to get faked out in my mind. I'd just rather be patient. Close is much more important to me than a breach of that whatever support or resistance I'm looking at. That's definitely what happened here today over in crude, knocking on that door. We were able to push through it. So now maybe a little easier next time around. I don't know. I still need to see it break and close above 55, which I will consider a bullish signal. Again, while we're not there today, next week at this time, we're pushed back down off of this. I mean, we shouldn't assume it's going to break 55, right? If we're talking next Thursday and we're down at 51.5, I'll be saying, hey, I'm still very open to a sell below 50. I just need either one of those things. We're knocking on the door, though. So again, like we've talked about the last couple of days, whenever we're potentially looking at breakouts, you always want to know how you want to plan, right? Very rarely should you be caught off guard when something that you trade, that you follow, breaks out. You usually have time. Every now and then something just goes crazy, right? But most of the time it develops like this. So whatever it does or doesn't do, we're going to have ample opportunities to be ready for it, right? So whatever that might mean, maybe it's just, hey, we'll just watch it and wave at it and wish everybody well. That's fine too. But I always want to be ready to go, no doubt. Definitely a fun day in the market. It's been a fun couple of days in the market, seeing things move after being sideways. I'm perfectly fine being, boring and dull. I've got no objection to it, not any. But I also like to see things move and shake a little bit too. And today was definitely a day of movers and shakers as we continue to work through this earnings season. We've got another week ahead of us of pretty heavy earnings. Then it'll start to die down. So we're not out of it just yet. It'll be really interesting to see how it impacts. How it impacts. I mean, for the most part, the market's responded positively. There's been good earnings, bad earnings, but so far it seems like the good has outweighed the bad. We've seen some outlook misses. We've seen some outlooks raised. We've seen earnings crushed and earnings completely missed. Oh, I forgot. I got to show you this one chart. I guys got to show you this chart. I just got a kick out of it. I don't know how useful this is going to be for you, but I think it's fun. So here's ABC, came out with earnings here, before the market opened here today, gapped up on the open, opened right above that 50-period moving average, right above this little, previous swing level of resistance. Not a huge level of resistance. We had one of those little intraday breakouts. Yeah, this one I just got a huge kick out of, Blake. Because of how it played out, open right on top of the 50, screams up the charts right into the 200 and sells off. Now it's kind of funny just looking at the candle like that, but if you look at it on the intraday, you can kind of see the early morning. Oh, this just great report. Boom, 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 just smack. And then I just thought it was really funny the way it played out. And this is why I use moving averages. They're not the end all be all. Just because it's there doesn't mean anything. But I have seen way too many times stuff like this happen, and I got a kick out of it. So I wanted to share it. I was going to bring it up in the halftime report, but I did not get around to it. So And I don't know if the guys would have been able to check it out or not. So I thought that was a fun one. Keep an eye on those earnings going into next week. So yeah, it's tough to break that 200. It is. And it works in a lot of different time frames, in my opinion, too, Blake. But yeah, and we're easier. I mean, how much easier of a decision was that? You wake up this morning and you see that, ABC's gapped up. It's hanging out of the 200-day moving average. It's up big on the day already. Is it going to go up more? Is it not? Well, let's just take our profits at the 200. I don't know. It seems like a pretty easy call in the short term. So, and Enable, yeah, Roku coming out here today. Let's take a quick peek at Roku together here. Coming out, they were in the options report. Is that correct? So yeah, CRZ. For me, I see the signals on Roku, and I do get them. I'm a little more patient on this side because I am watching that 200 personally, and that is again not right, not wrong. Sometimes very right, sometimes very wrong. But I do pay very close attention to those long-term averages in my own personal day-to-day stuff, and so that is something that it scares me again. No one will ever accuse me of being bold able. Don't get me wrong. But we definitely are, took out that little high here today. You saw MasterCard, interesting little develop. So yeah, I mean, it's kind of flat, so I'm not overly concerned about it, but I'm always, it's still there, and we've not tested it for a while. So that is something that would, concern me, at least from a short-term perspective. MasterCard, one of those nice gap right into the resistance on the earnings, really back and forth, pretty nicely here. Hung out for a little while, opened up the door for a short-term trade, as it kind of established itself. Now it's kind of using that, trying to develop a support. This one should be fun. From a technical point of view, if we can hold this breakout, definitely some room, to go over here. Maybe consolidating for a week would be all right with me. Even pulling back and then breaking out, later, late next week, that would be okay with me. But a nice jump into, always looking for those things. Always looking for those, as we talked before. I love when it has to make a call. It's got to make a call one way or another. Either resistance is going to knock us down, or we're going to break through it. And either way, should be. So, ladies and gentlemen, I guess that's going to do us for the market recap today. But man, are you guys having fun this earnings season, or are you about ready to get it over with? I enjoy it. I'm tired by the end of the week because I try to go through, everything, get at least a quick read, everything before market opens, so I can, find things, share them with our team over on Twitter, but find things that might present interesting opportunities early in the open. So I'm, up before 6 o'clock, which isn't a big deal, but I'm using my brain and I'm using that and my eyes instead of just sipping coffee. So by Friday, I slept in really nice last Saturday. I expect I'll do it again this one. So yeah, I'm starting to feel I still wake up. I still feel like a kid at Christmas because I love the price action of earnings. And so I'm always excited about it, but I'm getting a little groggier. The older I get, the more it's, all right, let's get going. So I'm a big fan, and I used to not like earnings season, but that was more when I was really focused, just on directional trading. And just as a directional trader, earnings season can be frustrating because you find a good setup, but you can't take it because earnings are coming out tomorrow. I'm sure we've all found something like that in the last week or two. That MAS, I think, was that I threw out on Twitter last week, but they've got their earnings next week. Nice double bottom, nice potential break, but earnings are coming out next week. Can't touch them as a directional trade because at least I can't because my rules don't allow it. So I just have to hope that they continue to consolidate and then break it after earnings. So directionally speaking, it can be a little more of a frustrating time if the only thing you do is trade directionally. And if you're like me and won't hold through earnings, if that is a rule, because there's just fewer trading opportunities because earnings are always in your way. But as I've embraced over the years more strategies, more cash flow systems, and things like that, volatility systems. Exactly, Blake. I don't do a ton, I don't. But I like being able to. I like seeing the price action. I love things that break support, break resistance after a good / bad report. One of my favorite things I love when a stock has great earnings, but then the market sells off for a week and you get it at appears to be a discount, if you will, on some good signals. So yeah, I'm having fun with it, loving it. Of course, I'm not going to complain when it's over and I'm sleeping till 6:45 again. So it's never the first day, it's never the second, it's the fourth and the fifth dragon. That's all right. That's all right. If that's a complaint I have, then I'm doing just fine. As always, ladies and gentlemen, it's my pleasure, and I certainly appreciate everybody's time. If you are new around here, first off, welcome. Great to have you with us. Be sure to subscribe to the channel and hit that notification bell. And if you do the Twitter thing, head on over to Twitter and follow us over at Tackle Trading. You can also find me at Frank Martin 23 if you would like, or if you'd like me to get you added to that Tackle Trading Twitter list where we can stay in touch with one another. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up. So thank you for that. Always a pleasure, Patricia. Guys, it's always great to spend some time with you. Thanks so much for hanging out with me and doing my routine with me each and every day. So with that, ladies and gentlemen, get the heck out of here. Have a great afternoon or evening, depending on where you're at, and I will see you tomorrow. Good night, everyone.